All right, guys, alert the media. I've had a substantial green day and I am completely happy with it, which I'm pretty sure is the first time ever in this account, at least. You've probably noticed over previous recaps that a lot of the time when I have a good day, including yesterday, which was a record, I'm often disappointed somewhere. And today I can honestly say that I'm happy with 100% of the actions that I made. So much like yesterday, day 26, which is today, is not a 100% closed yet. I am leaving it open for the possibility that I'll go back later in the day to recapture what I'm thinking might be some opportunity on NSYS, which is the only stock that I traded today. But for the moment, for the morning session at least, I have a win of $158.65, which is a net ROE of just over 5.6%, which is no doubt a substantial gain. And I am 100% today on the two trades that I took, which increases my trade streak to 7 green trades in a row, which is pretty rare for me, I must admit. So before I get into showing the charts, I will give you an overview of my two trades from today, which are listed right here. And if you need to pause and take a closer look at those, feel free to do so. So coming into today, like I mentioned in yesterday's recap, I did have, an attitude of wanting to wait for the right stock. And so when I woke up and I saw a gap scanner filled with a bunch of stuff that didn't really interest me, the best thing on there was SINT, and that one just seemed to me like something that would chop me up if I got involved. And then all of a sudden, I noticed NSYS pop up on the scanners. I did some quick research, saw they had really positive news, which was a substantial gain on their year over year third quarter earnings. And they had shown substantial gains in all the key areas over their previous year in the same period. And that to me was good enough. And then I looked at the float, saw it was 980,000 shares. I looked at the daily chart, saw some really big windows. And so this one got me excited right away. And I decided to get in early with a pre-market trade. And this is one that I did have a little bit of trouble with. It didn't go as cleanly as I wanted. I actually missed my intended entry, which was just above 490. So what I had was I typed in the level 2 down here. I typed 125 shares, and then for the price, I put $5 to give myself 10 cents worth of wiggle room if it, jumped up above 590. And I was risking off 460 initially, and as I'll explain in a minute, that changed pretty quickly. So what happened here is I missed my entry. I hit the buy button, but by the time I hit the buy button, the price on the ask side was already above $5. And so I had to quickly readjust my plan and change it up a little bit. And because I was getting so far away from the 460 risk level, I had to be pretty quick to decide what I was going to do. And what I ended up deciding to do was see how the price looked above $5 and whether or not it was just going to pop above 5 and then flush back down. Because if it flushed back down, then I could potentially take a dip buy for my starter and then ride it up to my intended target. Now, as you can see, you may not be able to see it on the chart, but my entry was 125 shares at 527 on this candle right here. And where I decided to risk from was the previous high of the last move, which was 490. Now, it's worth a mention here that two things happened with this delayed entry. First is that it shrunk my profit target, which I was only intending to be $6 and possibly $6.50. However, it's worth a mention that my eventual entry at 527 was around the area where I would normally have planned to add. So if I had taken an initial entry just above 490, I would have been adding close to 530 in order to increase my profits going up to $6. And in this case, because I had taken my first entry at the level where I would normally add, I ended up deciding against adding the entire way through this trade. So as we fast forward the chart here, you'll see that there was a triple bottom that formed here at $5. And so that's when I moved my hard stop up to $5 with a primary stop at my entry price. And this volume spike was definitely welcomed. We moved all the way up into 580 pretty cleanly. There was a bit of a stall around 560. And, still I was keeping an eye on the volume, and I did notice that it was pretty light. On this push, we only had 12,000 shares of volume. And even though that's fine for me to get in and out, the spreads were pretty notable at this point. And, I didn't want to end up getting burned on some sort of rug pull on the bid side. That was something I was very mindful of. So I did want to keep a pretty tight stop going up. And you can see I took my first profit take here at 580 for half the position on this candle here, selling into strength. And then on the very next one, I ended up taking the rest off at 608. And the reason for that was because I didn't like the hesitation that I saw around $6. We popped through 6 on this first candle and hit 610 and pulled back. And then on the next one, we tried again, and it doesn't show on this time frame, but there was quite a bit of fluctuation in between 580 and 620, or whatever it was there. Yeah, 620. And I thought this looked a little bit like the early signs of a reversal. And after all, this was a pretty substantial push. We went up from $5 all the way up to 620 in just a couple of candles. And so I thought there was a good chance that people would be taking profit here. And if that were to happen, I wanted to be one of the first ones. I didn't want to let this thing retrace its entire move. I did want to give myself a decent profit cushion on the day. And even though I did think that this thing had parabolic potential, I didn't want to set myself up to get annoyed early in the day. And so I decided to just close the trade right there, take the rest off at 608, and I found myself pretty happy with this. Once I did the math, I realized that I had booked a 11% ROI. It was only a $660 position, and yet I made about $78, I think, on this trade. And so I was really happy with that, and it gave me the confidence to continue being patient and to wait for the consolidation that I expected to see coming off of that 620 level. And if I fast forward through the charts here, you can see that indeed we did enter a period of consolidation which had the potential to chop me up if I, decided to hold or if I had decided to add. So this just reinforced my confidence level about my exits on this trade, and I felt really good about it. It made me more patient. It showed me that my ideas were strong, my read on the stock was good, and in addition to that, it consolidated really tightly sideways. It didn't really drop all that far. You can see the bottom of this candle here was 570, and we didn't really drop below that level again for quite some time until right here. And to me, that signified, okay, this thing is strong, and if it's doing this on light volume, then it's probably going to have a lot of potential once the market opens. So now I've got the charts adjusted to the last minute before the bell rings. And you can see that we had stuck with that consolidation pattern. There was a little bit of a descending trend here, and indeed the volume as well was descending. And then just before the bell, like 5 minutes before the bell, we started pushing, and I thought, no, it's too early. Stop it. Stop doing this. Cancel this idea, and let's just wait for the bell. Because the last thing I wanted to see was for it to, hit my entry trigger right before the bell. I was not even ready to take a starter position at 9:28 a.m. There was basically no price action that I was ready to get involved in just before the bell, because the last thing I wanted to do is, buy above 650 and then have it wash out and go down to $5 in the first minute of the day. But thankfully for me, you can see in the 2 minutes before the bell, it did pull back, which made me happy again. So as you can see here in the first minute of the day, there was a pretty substantial push. We opened up at 605 and never dropped below that level. It was straight up from 605. And I decided to wait for some substantial confirmation before I got in. I was tempted above 620, which was the high of the previous candle. And that's mostly because this was an inside candle and I didn't want to use that as my trigger. So I decided to use the one after it. And so I was anticipating the break of the pre-market high, looking for what's sometimes referred to as a gap and go setup. It's not one that I normally like to play, but I was comfortable with the risk setup because with a stop at $6 and an initial entry at $6.35, I was only risking about $50 on this trade. And so you can see I took my first entry only 5 seconds into the day. And the only thing that I didn't do really well on this trade was my add-on here at 670. I jumped the gun a little bit on the break of 670 where there were some sellers stacked up on the ask. And we ended up coming back down from 670, and I think the lowest we got was about 650, which by that point was just above my average entry. Now, something I will take a break here to point out or to remind you of, even though I may have mentioned it in other videos or in the past, is that every time I add, as soon as I add, my stop gets reset almost 100% of the time. And that's because that's the point in the trade where I'm the most exposed. Especially in cases where my add-on is a little bit close to my initial entry. And in this case, it doesn't look that close, but realistically, I mean, with the volatility on this thing, I could have easily surpassed back down to my entry. And so what I did on this trade was I set my primary stop at 650, and my hard stop at 635 where there was some bid support. And the reason for these adjustments is mainly because this is a high risk setup. The first few minutes of the day are extremely volatile, and I'm not super comfortable in these kinds of situations. But on the other hand, I do this pretty much all the time anyway, and that's largely because my preference as a trader is to be a breakout guy. I'm somebody who likes to buy high and sell higher. I generally don't buy against support. I wait for a lot of confirmation before I get in. My favorite setups are high of day breakouts and halt resumption plays, which are very fast moving setups that, carry a lot of inherent risk. And so, in order to be profitable on these types of plays, I have to be using kind of like a trailing stop type strategy where I don't let big green trades go red. And so, adjusting my stop is part of what I do to taper the risk on the downside, which has the effect of making my risk reward ratios a lot stronger. So getting back to the trade here, I had two exits on this one. The first one was at 708, which is one that made me almost have a party in my head at the time because it was damn near close to a top tick. Technically it was, and this is a good time to mention that I really wish I hit the record button at the bell like I had initially planned and didn't end up doing. I thought about recording this entire session because I thought there was a huge percent chance that I would be getting involved in this. And I also thought that there was a high probability that we would see quite a few halts. And so I just wanted to be recording the whole thing to make sure that I got all of it. And I didn't end up doing that, which is a shame because I'd love to see what exactly happened to make me get this fill. And something I'm super proud of on this fill was that at the time that it moved up into the low sevens, the ask price was at 715 and the bid price was still below 7. And I threw up an order to sell half at 714. And there was a moment in time where I noticed something on the tape that made me had a series of reactions that took place in a time window that I'm going to be proud of for quite some time to come. So what happened was I had an order up at 714, and from that moment to the moment where I did get filled at 931.35 at 708 for half my position was probably about 30% of 1 second. And within that 30% of 1 second, I canceled my order at 714, readjusted it to 708, and then got filled. And I won't speak too much about how proud I am of that. I don't have the video to be able to show it, so it's really kind of pointless to get into. So for the rest of the trade, the other half, I did reset my stop on this to, I believe it was 677. I adjusted the hard stop. I just brought it all the way up to 677. I wanted to see either an amazing squeeze up to $8 or I was not going to be too patient for a retracement. And I ended up stopping out the rest at 680 in anticipation of the breakdown back below 670. And the retracement didn't go as far as I thought it would. Looking back, I suppose I could have just held the stop at 650. But in any case, I did get out of it here at 680. And you can see based on this 1 minute candle that there was quite a tug of war coming off the low sevens and going all the way back down to 660. And if I advance the chart, you will see that it did go up to 730 something, 736 I guess, before coming back down. The question I always ask myself is how would I feel about this if something else happened, if the opposite happened? And if, I had decided not to stop out at 680 and then this thing just plummeted down to $6 and I got filled at $6, well, I would have been pretty upset because that would have given back a lot of the profits that I made with the first exit. So as I just mentioned, I was super proud of my exit up here at 708. And, my stop out was okay too. I don't really have strong feelings one way or another about that. But what's more important, I think, than the trades that I did take today was the trades that I did not take. And the first one we're going to look at, there's two that I want to talk about. The first is right here from this bounce off 650. I tried to get in at 560. When I saw it come down to 50 and the bids held, I thought, okay, let's get in. And the way I tried to do that was on the level 2. And the reason I used the level 2 instead of my hotkeys was because I didn't want to get an unnecessarily high fill. If, it bounced off 650 and then started ripping up, I didn't want to get filled super high because I expected there to be resistance in the low sevens just as there had been on the previous rip. And so what I did, the entry that I tried to take was 200 shares. And I started thinking about this trade pretty early on. And so I had this typed in, I had this ready. And so what I wanted to see was a move back down to 550 or 650 rather, and then a push back up. And I tried to get maybe a little too good of an entry because my target was so close. This was basically going to be a bottom bounce scalp that I had only intended to hold for maybe 90 seconds. And so, I had this 200 shares at 560 typed in the level 2, and when I saw it bounce off 550, I smashed the buy button. However, by that point, the ask side had jumped back above 560 and I did not get filled. And a lot of the times in the past, I would have just used my hotkey. I would have switched immediately over to my hotkey, hit control squiggly line, or whatever you want to call it, and taken 125 shares. And in this case, I actually crossed my arms. I decided, nope, I'm not doing that. As it, broke through the 70s and started going up towards $7, I thought, okay, you missed the entry. The whole point of this trade was to taper the risk so far down that even if this thing failed, it would still be profitable. And because I missed that entry and I missed that setup, I decided not to succumb to FOMO, and I really showed a lot of discipline in here because it resolved pretty much exactly the way that I wanted to see it resolve. And even better, in fact, my target was going to be in the low sevens, like 710, and yet we did that in the first candle. And then on the next candle, it went all the way up to 746. So this could have been a pretty big winner. And I did not take a FOMO entry. I didn't revenge trade it. I didn't go above my plan. I didn't go outside of, the risk reward that I had set up initially. And that made me feel really good. And I think it reinforced the discipline strength that I had already shown in the day and made me even more disciplined going forward. So that trade that we just looked at, that was me missing a winner. And I was very happy about it, even though I did miss a winner. I was happy that I didn't get in above my planned entry and that I stuck to my game plan. And when my game plan no longer became available, that I got out of it. And this next one is a missed loser. And I've drawn a couple of lines here to try and illustrate what I was looking at and what I was thinking. I noticed the ascending support, which I didn't have mapped out at the time, but I did notice, it's pretty hard to miss the, continuous higher lows, continuous higher lows. And so what I thought the whole time pretty much during this day, I wanted to see the break of $8 because that was the level on the daily chart, as you can see here, that was the highest resistance line on the daily chart. And I thought above that level, the sky's the limit. Like that's going to be the trigger for the halt festival that I'm really looking for. That's the one where I want to get heavy and I want to scale into a big position that I can hold through one or two halts and make like $800 if that in that best case scenario. And so on this one, I was considering taking an entry on the first 1 minute candle to make a new high. You can see after that top out at 746, we started coming back down. There was a red doji candle here, and then there was a bottoming tail. Now the volume was descending, which was the one thing that bothered me a little bit. The bottoming tail was pretty strong. The support at 650 had already proven valid, and I thought that I could add those facts together to make a pretty good plan to take a starting long entry on a very early anticipation of an $8 break, which would of course have to break high of day first. And if I fast forward the chart here, you'll see that we did make a new high on the 1 minute. And I decided to just give it a second. And the volume was pretty decent. It's really hard to see. All you can see in this candle now that I fast forward is the red. But at the time, it was moving up and it topped at 706. And I thought, okay, if we can get past, the previous highs, this is looking pretty strong. And I was thinking about taking my first entry around 720. And I didn't do that. I didn't take anything above 7. I just thought to myself, just wait a minute, be patient. If this thing is really going to resolve and go into a halt fest above $8, you've got a lot of time to wait. You don't have to get in now. And as you can see, this death candle this was unbelievable how fast this thing plummeted. From 706 down to 592 in, honestly, I think it took about 20 seconds from top to bottom. And obviously, this candle represents people stopping out left, right, and center, the people who got in earlier in the day. And if we fast forward even more, you can see it didn't stop at 592. It went all the way down to the low fives and continued down into below 5. And so I'm just going to get rid of these lines here because they're annoying me. But if we back this up and look at sort of the bigger picture, what I avoided on this is a potential catastrophe. I mean, I definitely would have experienced slippage on my exit no matter where I tried to take it. I was watching the tape, I was watching the level two, and it was pretty crazy how fast it broke down and how quickly bid orders disappeared once it started breaking down. And so I feel like this non trade was a result of the confidence boosts that I had had based on the discipline that I'd shown earlier in the day. And, this is like a snowball effect on the positive side. A negative snowball is when you don't show discipline and then you continue to show less and less discipline. In this case today, I had shown good discipline and I was being rewarded for it. And so being rewarded for the good discipline and taking the setups that I was really the most confident in had led me not to take these more questionable setups, which you've seen me take in previous recaps. And this happened to be one of those times, even though this is a pretty fluky drop and, was an unexpected plummet. It's something that does sometimes happen. And who knows how bad the damage would have been. This could have changed my entire day to bring me into the red. And if I did do that, this is a kind of getting into alternate history now. But if that did happen, who knows how bad this could have run? This could have been the trigger for a real big snowball where this trade going so red would have annoyed me. At this time, I had the same P&L that I have right now. And if I had turned a $160 winner into, let's say, like a negative $100 day, I may have kept trading and I may have taken some subpar setups in order to try and quote unquote make it back. And that is horrible, psychology to slip into, and it can be really damaging. And I can't say I've really done that a lot in the past, but it has happened to me. I have been guilty of it, and the times when I have been guilty of it, it has had quite a big impact on, my attitude, my emotions, and therefore my results. So as I give you a little bit more time to look at my trade log, I will say that I think the takeaway from this day is very big. I think I experienced a lot of personal growth today. I feel like I confirmed a lot of the ideas that I've had about my trading history and shown myself that, I can be a lot more profitable when I just don't splash around as much. When I wait for these bigger moves and I wait for these premium setups, I can do quite a lot of damage. And I mean that in a good way, like good damage. If we look at my net P&L here, I'm up $440 since my last losing trade. And on the balance that I started with at this time, I mean, that's like right around 17% equity growth since my last red trade. And even though in these ones there were quite a few mistakes, I feel these last three, that's where the growth happened. That's where I've really made progress mentally and strategically. And the amount of confidence that I'm getting just out of these couple of trades, which aren't, home runs exactly, but the amount of confidence that I've got out of them is really huge. And I feel like it's going to feed into itself and is more likely to make me be patient and to wait for these premium setups. And given the market we're in, I mean, we've seen some big runners 2 days in a row now. I feel like this is the lead up to maybe a market-wide momentum shift, in that these kinds of moves are going to become more and more common. And in the past, I've given up a lot of the big profits that I've made on these moves by getting involved in some of the less premium setups within those time frames. So like the market is hot, and even though I'm booking home runs, I'm giving some of it back by taking B quality and C quality setups. And so that's a really big takeaway for me today. Like I said, I think like some serious personal growth happened today in just 2 trades, basically. Two trades that I took and 2 trades that I didn't take have made me learn more about myself than I think I have with the rest of this account, pretty much. So as we switch back to my daily results here, I will point something out that I'm a little weary about going forward, and that's the fact that I'm approaching my primary goal with this account, which is to be 50% in the green net profit over a course of 3 months. And you can see I will be opening tomorrow, assuming I don't take a trade in the next half hour, I will be opening tomorrow with $20 less than that 50% mark. And so I feel already like that's having a mental effect on me. Right away when I booked my trades and then I logged in my information, one of the first things I did was calculate whether or not I'm up above 3,000. And I think that's kind of a warning sign that I might trade differently and I might be a little bit too quick to book profit. So Hopefully I will not. Hopefully I will be able to have a handle on that, realize that, none of this matters and it's all about just making good decisions. But so far I do feel like a little bit of nervousness, like, oh, here, we're almost there, like you've almost, done it. And so going into tomorrow, my focus, much like it was coming into today, is just wait for the right setup, the one with all the criteria. And if it doesn't show up, then just don't take a trade. Treat it like Monday of this week. Just stay patient and close up if nothing shows up and wait for the next day, because the fact is that the market's going nowhere. But my profit loss can go very far if my emotions don't stay in check. But in any case, that's going to be a wrap for me today, guys. I hope you found this video helpful. I certainly found this day helpful. And I'm really looking forward to seeing some momentum. So until next time, take care.